Hi, everyone. We are the DC Day Swing Traders Group. We meet monthly on Zoom. And today we have a guest speaker, Tri Phan. And Tri will highlight exciting trends in the global electric vehicles EV market. Tri has been an equities investor for over 10 years, and the last 5 years has been focused on the renewables, electrification, and green energy sectors. Electric vehicles emerged as a strong growth sector in 21, with 100% year-over-year growth in the US and close to 9% of the total global automotive sales. This presentation will highlight and identify global EV trends and growth potential, investment opportunities, climate and regulatory drivers, technological advantages, and other market dynamics, electrifying the growth of this sector for decades to come.
I guess I'll get started if that's okay with everybody. Thanks a lot, Ethan, for inviting me and giving me an opportunity to speak, and present for your group. It's something that I, had a strong interest in doing, and I'm happy that it's happening tonight. Basically, what I wanted to do is kind of walk you through some high level the trends that's kind of happening within electric vehicle markets. And then along the way, I wanted to kind of give you some ideas, investment ideas within like different sectors that you could potentially invest into and take advantage of within this whole industry. Just want to let everybody know, like what I'm presenting is really for educational purposes only. I'm not a financial advisor. When I invest full time. I've been doing it for about 5 years now. And basically I'm investing just my own money. So I'm really not interested in investing like anyone else's money at all at this point. So everything I want to show you tonight is mainly just for educational purposes, but I've done a lot of research into it. So I think it's going to be good information that you're going to be able to see. Okay. And if you have questions along the way, just feel free to jump in and ask. Okay. So basically, this particular slide here kind of gives you an outline for basically the next 5 years of growth within the automotive space. Specifically, these are basically sales for light vehicle production. What that means is basically passenger vehicles and pickup trucks. What you don't see here are basically buses, freight trucks, delivery vans, things like that. It's all passenger and pickup trucks. So basically, as you can see, 2020, we took a hit. We went down to 70 million units. We recovered a little bit in 2021. But if you kind of look out to 2025, what the global sales for this industry, we're looking at probably around 99 million units across the world. Europe, US, China, pretty much anywhere. So I wanted to kind of show you that for context. And this information is from Statista, I guess. So you can kind of go there and take a look at it yourself if you want to. In terms of like the electric vehicle market penetration, I want to kind of give you an idea of what's been happening over the last 3 to 4 years. And so in 2019, 2.5% of all new vehicles are basically electric vehicles that were sold across the world. Okay. In 2020, that nearly doubled to 4%. And then in 2021, it went all the way up to almost 9%. So you're looking at probably the last 2 years, about 100% growth year over year. So the trend is, is good in this particular industry. And what I wanted to kind of hone in on is basically like in 2021, the overarching US sale is around 4.5%. Okay. What's really important here is that in December 2021 in Europe, penetration was at 21%. That's pretty cool, right? 1 out of basically 5 cars is an electric vehicle that was sold in Europe. In China, it started at 7.2% in January, but it ended in December at 20% penetration rate. So it is obvious that the trend is going to be very positive within this industry going forward. What I want to kind of show you guys here, the next couple of slides, is basically what the projected trend is going to be, like the sales trend is going to be over the next couple of decades. So this research here was done by the Bank of America Global Research. And so from their perspective, the penetration rate for electric vehicles, and what they're talking about here is pure battery electric vehicles and hybrid electric vehicles, okay? So everything combined. So in 2025,
You want to drive me around. We told her Doritos.
Can you please
I
turn
knew
your
that's
mic
why we
off?
said it.
um,
Okay,
yes, sorry.
I muted them. Go ahead.
Oh, good. Okay. Yeah. So basically, the Bank of America. So in 2025, they're projecting penetration at around 23%. By 2030 at 40%, and then by 2040 at 67% penetration rate. So that's really strong growth over the next couple of decades. So their research for the U.S. Okay, this is important for the U.S. only. And so what you're seeing here is the bull case scenario. So they have like a bear case scenario too, but I'm just going to focus on the bull case scenario because I think that's probably what's going to happen. So for the bull case scenario, they're looking at by 2025 penetration to be around 25% of like EVs that are basically being sold at that point in time out of the total market of vehicles that are sold. And then by 2030, looking at like a 50% penetration rate. I think these are relatively safe numbers. I've seen other numbers from other researchers as well, and they're typically in the same ballpark as well. So it's just want to let you know. So this is kind of an interesting slide I wanted to include, because there's drivers, right? That's basically driving the sales of electric vehicles. And so the key drivers obviously is to reduce CO2 emissions. CO2 emissions within the transportation industry is around 25%. And so if you take transportation and you take power generation, CO2 emissions is like 50% of what's emitting all this bad gas into the atmosphere. So just to kind of give you context, if we can solve transportation, we're basically reducing gas emission by 25%, in total. So that's kind of a good thing, right? But in terms of specific drivers within the US, I know Biden recently established a target of basically 50% electrification by 2030. It's not law yet, but it's definitely a target that the US is trying to do. In Europe, it's kind of interesting. They're looking at basically zero emission by 2035. And then there are specific countries within Europe like Norway, the Netherlands, where literally by 2025, they want zero emission vehicles, running on their roads. And if anybody ever go to Norway or the Netherlands, literally all you see are basically Teslas and other electric vehicles everywhere. I mean, their penetration rate right now, as of like 2021, is like 75%, literally. It's extremely high penetration rate. In China, what they're looking at is basically 20% by 2025, 50% by 2035, and literally they want to phase out no more gas cars by 2040. So, I mean, the US, Europe, and China probably encompass around, I would say 70% of the car sales globally. Everybody else falls into that like 30, 25% bucket. That's kind of the remainder. So just kind of give you some context there. Hopefully India will come online with a lot of car sales going forward. I think, within the next 5 to 10 years, India might be the next big automotive market, but, it remains to be seen at this point, but that's something for you guys to keep an eye out on as well, okay? So in terms of like, why electric vehicles, right? I mean, it's not just regulatory stuff. I think there's other drivers behind it as well. That's, because it's really, in my opinion, I think electric vehicles is like a step change technology over gas vehicles. And this is kind of like my perspective as to why that's the case. So the obvious is it's better for the environment, it's better for human health and things like that, right? In terms of the actual electric motor, you have like 20 moving parts versus like 2,000 parts in a gas engine. What that really means is that it's less complex, there's less maintenance. You have no oil change to worry about, no tune-ups, no emission inspections. And then a lot of like the electric vehicles have this concept called regenerative braking, where basically when you take your feet off the accelerator, it automatically brakes the car for you. And the act of slowing down the vehicle, it generates energy, and it takes that energy and it puts it back into the battery. And by doing that, it extends the range of the actual vehicle itself. So if you drive, a Tesla, which has regenerative braking the right way, you probably would never have to change the brakes in its lifetime. So just to kind of put that out there, I mean, the maintenance is completely different compared to a gas vehicle, and there's a lot of savings there as well. And there's a lot of studies out there that kind of goes into the savings and things like that, but I don't want to include it here, in this presentation. I think the one big cost savings that I did include here is basically like the usage of electricity versus gasoline for EVs. And so I have a Tesla Model 3 long range. So for me to charge, 350 miles, charging at home, basically at night, I'm paying about $10 for 350 miles to charge my car. And that's at nighttime, okay? I used to have a BMW. I have two BMWs, actually. I trade both of them in. And I gave one to my brother, actually, as well, and his family. But when I had my BMW, you got to use premium gas. And so with the gasoline price the way they are today, you're looking at basically $65, for a 400 miles range with a BMW. It's night and day in terms of cost savings. So that's definitely something to consider in terms of why we want to go with electric vehicles versus not. In terms of like some of the negative aspects to electric vehicles, I want to put it out there as well. The sticker price is kind of high. Typically, you're paying $40,000 or more starting out. And that's on the low end. A Tesla right now would probably cost you $45K and up. So you're paying a lot more money starting out for an electric vehicle. The range anxiety, a lot of people worry about the availability of charging stations and stuff like that. So that's something to consider. I mean, they're really good local cars where you charge at night, you go to work during the day, you come back, you charge again. Like really, if you really think about it, most people only drive around 30 miles a day. So you really don't need, an electric vehicle that has 400 miles of range. 300, 350 is more than enough for a whole week's usage, typically. Charge time, I think, is a big thing. 80% of range in about 30 minutes, typically. That's a lot. I mean, it's a lot. So typically, if you travel, you go on the road, a lot of people typically charge while they're stopping for lunch or stopping for dinner. That way, you're spending about an hour eating lunch or dinner. That way, you're getting pretty much most of your battery replenished, while you're eating. That's what I typically do when I go on the road and I go into a different state and so on. New technology, a lot of people are afraid because there's a lot of like social media posting about fire risk with not Tesla, but with like GM as well. Recently, there's been a lot with GM and some of the other electric vehicles out there. But if you really do your research, the reality is that the number of battery fires is probably the same percentage-wise as gasoline fires. Seriously, I think social media, just kind of blows up, any kind of fire that happens with electric vehicles, but the probability is really the same across both platforms, gas or electric. So just do your research. Safety favors electric vehicles because the weight of the vehicle is towards the bottom. That's where the actual battery is at. And so the rollover risk when it comes to electric vehicles is very minimal compared to a traditional gasoline car. So something to keep in mind. And then insurance is actually a bit higher as well. Typically with a Tesla, I think the average annual cost is around $1,700. If you were to go with Progressive, that's what I'm using right now, I'm paying about $1,300 per year. So it's a bit less, but everybody else tends to charge higher for an electric vehicle, specifically a Tesla. Okay. Okay. Here are some like stuff to kind of look at in terms of like risk, and what's been happening within the supply chain around electric vehicles. So with the battery, battery usually comprises of the lithium, graphite, nickel, things like that. Steel, aluminum as well, makes up the body, copper as well. Could be utilized also inside an electric vehicle. But as you can see in 2021, a lot of these commodities has increased, anywhere from 15% to 255% for nickel in 2022. So there's some concern there, with like the increasing costs for the for the components that goes into electric vehicle. That's why if you look at Tesla, they actually increased their prices 6 times since 2021. And recently they increased it another couple of times this year already in 2022. So, prices are going up. And that's because it's driven by all these cost increases, with the commodities and things like that. A couple of other things to kind of be concerned about is like the chip shortages that we had in 2021. And then I know the US government is trying to bring back a lot of the fabrication, the making of chips inside America, but that won't really become a reality until probably 2023 or maybe after. So this could potentially still be a problem for most of this year, and it's going to alleviate probably later this year going into 2023. That's just my opinion. And that kind of held back production. That's why in 2021, used car prices went through the roof because there were just not enough new cars out there for people to buy. So used car prices went through the roof. And then another thing just kind of be concerned about is like dependencies on foreign supply chains. So like a lot of the lithium and nickel are basically overseas. Even batteries are actually developed overseas as well. And so a lot of the time we import the materials here and we basically put it into the car. And I think that's changing. Tesla is coming out with their own battery technology. They have their own battery manufacturing here in America as well. GM, Ford, they're all in the process of developing their own battery technology here in the US, and they're gonna manufacture that here in the US as well. So I think those probably won't come online until another couple of years, but at least a lot of that is now coming back into America, for security reasons and things like that. So that's a good thing, okay? So here are some sectors, that, if you want to invest, into electrification, this is kind of like some sectors you may want to look at. I'll go into each one here, just to kind of give you more specifics. So in terms of auto manufacturer, these are like the Ford, the GM, the Tesla, they're the one that actually make the car. I just have basically the company name, the stock. I have some basic metrics, valuation metrics like Ford PE, price to sales, things like that. This is just a small representative set of manufacturers. There's so many more out there, but these are the ones that I think are very viable going forward for the next decade. So that's why I wanted to include them here. But as you can see, like the pure electric vehicle companies like Rivian, Lucid, Tesla, Proterra, the Chinese one, NIO, XPeng, BYD, you can kind of see, like the price to sales ratio typically is a lot higher. And then Tesla is through the roof. So I mean, it is a somewhat of an expensive stock, right? But I think they're getting higher valuation, not because of the car business, but because of other things. So they're in solar, they're in energy, they're in services. They actually do their own services for the car as well. They're in battery making, and just a bunch of other things, insurance as well. So I think, it's probably fair to give them a higher valuation than these other companies who typically just focus on the car manufacturing, okay? And then if you look at the legacy players, like the Volkswagen, the Ford, the GM, Toyota is kind of expensive. I don't know why they're at 8 price to sell forward. But if you look at the more legacy one, like the Ford, GM, Volkswagen, they're all less than one. They're less than one, which means that they're very cheap. But there's probably a reason why they're cheap. I think a lot of people don't think they're going to survive like 10, 20 years out, and that's why they're trading at a discount. So that's kind of something to consider. I disagree with that. I think they'll probably survive. Some of them will. They'll lose market share, but I think most of them will probably survive to some capacity. And so I wanted to kind of share this slide to you real quick. Well, is there any question? Does anyone have any question before I continue? I probably should have asked, but I just want to kind of put it out there. Yes, no, maybe. Ethan, you have any question? Okay, I guess no questions. I'll continue. So
yeah, there we go. I had trouble with them. Like, no one else has a question, or oh, go back. Can you go back to the earlier slide, what we discussed the other night?
Which one?
Like right at the beginning.
You mean this one right here or
No, the one before that, I think number 2.
right here?
Right. Could you just explain what you explained to me about how it was higher in 19 and then went down, and just so everyone understands that?
Right. Yeah, I mean the trend, the trend globally in terms of like units per year that are sold, typically it's around 80 to 90 million units per year. That has always been the case. If you go back to the last 10 years globally, that's how much like passenger vehicles we've sold. We took a hit in 2020 because of pandemic, so it went down to 70 million units. 2021 we recovered, but I think because of the chip shortage, there wasn't enough new car that was available. Literally, I mean, there just wasn't enough new cars that were available, and so that's why the recovery wasn't as good. And we were sitting basically at around 76 million units in 2021. And so that's why if you look at like used car prices, I think used car prices went through the roof. Like I think what was happening within the Tesla community is that if you have a used car that had good mileage on it within 1 to 2 years, you could literally sell it for a higher price than what you bought it for. Literally, I mean, it was so bad, like how good you can get a return for your used car. And it's not just Tesla, it's like BMWs and some of the other like used vehicles out there as well. And it's all driven by the fact that we just didn't have enough chips to basically make new vehicles. But all that's changing. I think they have projected here for like 82 million, and it's gonna eventually kind of get back to maybe some normal state. And I think according to statistics, I think it's like the normal state is around like 98 million in that ballpark.
Thank you.
Yeah. So okay. So I'll just keep going. Go back to where I was at. Is there any questions?
I do have one question. Is there an ETF that for electric vehicles?
Yeah, actually there is. So there's a CARS, CARZ ETF that includes like electric vehicle stuff in there as well, and then there's also like a lithium, like LITH, I think it's like the lithium basically ETF. But the lithium ETF has other stuff in it. It has the miners, it has the battery, the charging stations company, and it has Tesla. I think Tesla is like the biggest holding in the lithium ETF. But definitely look at cars. I think that's kind of what you're thinking. Okay. And it may not be only for electric vehicle. It may have some of the legacy automakers in there as well, like the Ford and GM, because they're transitioning over into the EV market as well. Okay.
Okay, thank you.
Yeah, right. Okay, I'll just go continue where I kind of left off, I guess. So I guess we talked about that slide. So I think this is an important slide. So this research right here was done by, I think it's Piper Sandler. They're a Wall Street analyst company, I guess. And so, oh my gosh, can you guys see okay? Or can you see okay? I mean, I guess you can see the numbers here, right, on the right side. So basically what they're showing you here is what they're projecting, what the automotive manufacturer, market share is going to look like within the next decade, basically. So I just want to kind of highlight that in terms of basically Volkswagen and Toyota, if you look at them here, their market share as of 2020 is around 11%. They're the leader right now within the automotive manufacturing space. But if you go out to basically 2040, you're looking at Volkswagen dropping down to around 10.7%. And then Toyota, which is kind of interesting, is going to basically it's going to get chopped in half, more than half actually. They're going to go down to around 5%, 4.3% actually. And so if you kind of look at some of the other companies, like Tesla, for example, had like a 0.6 market share in 2020. And they're projected to kind of grow their market share up to basically 9% by 2030. And then ultimately they're going to maintain a market share of around 9% well into 2040. And so what I'm thinking is happening here is that literally the new entrants like the Tesla, the Lucid, the Chinese EV makers, the Rivian, which is like another US-based EV, they're gonna basically cannibalize what seems to be like the Japanese automakers. Toyota, if you kind of look at some of the other Japanese automakers like Honda Motors, same thing, 5.7% down to 3.5%. So I think what's gonna happen is that the Japanese will probably get hurt the most over the next 10 years and 20 years, based on what Piper Sandler is projecting. And it's kind of interesting, and I'm actually a little bit disappointed. They actually don't have like, I don't really have any favoritism in terms of which, like market, which vendors I think should do better or do worse than others. But I do think that the Chinese are a force to be looked at, for the electric vehicle market. I personally have an investment in Xpeng. I used to have NEO, but I can't seem to make any money with it. So I keep on getting stopped out. And after losing so much money in it, I just gave up and threw in the towel. But Xpeng so far, it's kind of, hanging in there for me. They have some challenges recently, but at least it's still working for me. But it seems like their penetration rate seems to be kind of low, and I found that to be a little bit interesting as to why they're projected to be so slow, to be so low compared to some of the other ones out there. But all these Chinese makers, Xpeng, NEO, BYD, they're branching into the European market. They've been doing it for the last year and a half now, and so I think a 0.9 penetration by 2040 is really a bit low. I think it probably should be at least maybe 2 to 3% in that ballpark. I think it's very reasonable, but definitely something to consider looking at if you want to look at some of the Chinese stuff. Okay, so let's just continue.
I have a quick question on that. Yeah, I'm just curious. So do you think eventually the batteries will be shared? Because isn't a lot of this dependent on the batteries that are less fireproof or can go more miles? Will the type of battery, or what's the word I'm looking for, like the new generation of batteries, will that differentiate the companies one from the other, or will those batteries start being shared across the board?
Right. Yeah, no, I think it's a very good question, Ethan. There's different battery chemistry right now. The nickel-based battery, which basically is what Tesla is using right now for the performance, the long range, Model 3, and the higher grade vehicles like the Model S, the Model X, those nickel is very energy intensive. And that's why with the Tesla vehicles, you can get 350 miles of range, per battery, and 400 miles and so on. And then there's another battery chemistry, which is based on iron phosphate, which is what a lot of the Chinese companies are using in China. Their range are a little bit less. You're looking at probably around 250 miles of range, for a fully charged battery. But the LFP batteries are a lot more affordable. And iron is plentiful, phosphate is plentiful, right? We have iron everywhere across the world. And we have a lot of recycling of iron too that we can take advantage of already today. So that's why I think LFP will probably be more well used within more like the low end, the vehicle. So low end meaning like the compact vehicle and the subcompact vehicle, right? You know what I mean? So the compact vehicles are typically around $25,000, MSRP, right? 25 to maybe like 30K in that ballpark. And then the subcompact is typically, like 20K and below. I think that's kind of the basic rule of thumb that I have for like those two markets. And then, the nickel base will probably be more targeted towards like the mid-size, the premium sedans, the premium vehicles, which typically starts out at around maybe 40,000 and up. So that's kind of like what I think what's going to happen with the industry. And then you have other types of battery chemistry too. You have solid state battery, which is supposed to be in the works. There's really nothing operational right now as of today. But people are thinking that it may come to fruition by 2025 or maybe after, maybe towards the end of the decade. And so solid state is supposed to be a lot safer, less fire, type risk. And the range should be a lot more as well compared to like the lithium, the nickel-based battery that we have right now.
Well, what's interesting is under the Obama, most people don't know this, but under the Obama administration, he formed a consortium of American companies to advance battery technology. And I talked to numerous CEOs who were members of that consortium, and they never met. So there was not much going on. They have the group, but they didn't seem to do anything. This was under the Obama administration.
Yeah, I think it was too early. If they were to do it now, I think there's a lot more traction. And I think there's a consortium right now for like battery manufacturers. And I think it's a lot more active today. Yeah, so. Okay, let me just continue. So this is the auto suppliers. Honestly, I really don't know what they do. I think these are the largest tier 1 suppliers. They provide parts, for the automakers directly, and they do it for both electric vehicles and the traditional gas vehicles as well. These are the biggest one, and you can kind of see the price to sell ratio is typically in line with the traditional like the automakers as well. It's less than 1, so very cheap, very affordable. If that's something you want to invest in. Okay. Charging infrastructure is like another sector that you may want to look at investing in. This is not representative of everybody, but this is like the most interesting one that I want to just kind of touch on. ChargePoint, and I think the Tesla charging network is like the biggest in America. So, I wanted to kind of include them here, okay? And then EV Box is important because I think that's the largest one in Europe. With the adoption rate in Europe going through the roof, definitely when this thing IPO, you want to consider looking at it. If the price makes sense, I would buy it. So I'm actually keeping an eye on it to actually buy it. QuantumScape, I think they're working on solid state battery. I'm not sure like, how they're doing. I don't follow them as much, but their stock took a big hit. It was, I think it was like 100 or maybe 90 something dollars per share, but now it's like, 15, so it took a big hit. Oh, and I'm so sorry. All my numbers here were as of the close Friday. Okay, so if there's been changes today, it's not reflected in the numbers that you see here. All my numbers are based on Friday at the close last week. ABB is kind of interesting, right? Because they make the charging stations and they sell it, to these charging network operators. They're a legacy, they're a conglomerate. They make a bunch of other like equipment and things like that. But I want to kind of put more on the list because it is somewhat of a play into like the charging infrastructure space that you guys may want to consider. As you can kind of see, their price to sell, their PE, it's actually very affordable compared to like all the other ones that are out there. Okay.
Yeah, I just wanted to mention on that slide, I believe if Angel's on, I believe Angel bought at one point QuantumScape. Are you on, Angel? No. And I'm currently invested in EVgo. And the reason I bought EVgo, I hesitated. I studied them for over a month. But I bought them because the woman who runs it is one of these top executive women in the world. And she was a former Department of Energy official. And if you listen to their earnings call, she's like amazing. She reminds me of Jennifer Tejada of PagerDuty, just really has this down. It was a very exciting earnings call. And also EVgo bought this app and all the Tesla drivers are using it. And the app identifies where all the charging stations are located. So they bought the app, they own it. I don't think they're charging people to use it, but I just know that's what sort of attracted my attention to EVgo. And the other thing, Tree, we were talking the other night. Do you want to mention Wallbox? I don't know much about them, but I think they're important.
Yeah, honestly, Ethan, I really don't know much about Wallbox either. They were at CES like back in January of this year in Vegas. You know, I stopped by their booth for a little bit, but I really don't know much about them, honestly. Yeah, Volta, I can definitely talk about them. They're kind of interesting. That's why I put them here. Volta, you know, they give free charging. So they got these like charging stations around, usually around like, you know, shopping centers, around places where there's a lot of like restaurants, you know, and places like that. And you can charge for free. And so typically the charge rate is around 22 miles per hour, right? So they're set up where if you want to go shopping and you want to go to dinner, you know, with your family, you go there, you charge while you eat. Once you leave, you know, you're probably going to get a minimum of around 22 miles for free. You know, it doesn't cost anything. What they have is like a big display. And so they advertise at the display. And that's kind of how they make their money. Yeah. So
I've noticed that at a shopping, in Springfield shopping.
Exactly. Yep.
And just down the street at my giant supermarket.
Yep.
And I think it says free. And I think, how can you give away energy? I mean, it costs something. It blows my mind.
Yeah, I don't know their business model, but I've never owned their stock because of that. You know, even like ChargePoint, there's certain places you can get free charging with ChargePoint as well. It could be that the organization that hosts, you know, the ChargePoint charging station, they're the one that's actually giving out the free energy, you know, not ChargePoint themselves. So I don't know really what the relationship is between ChargePoint and those places, but yeah, I mean, it's definitely something to consider because you're getting literally like free gasoline per se, right? For having an electric vehicle. How can you like not go with an electric vehicle when people are like giving you free gasoline, you know, for lack of a better word? So
it certainly makes sense to have them outside of restaurants and you know, grocery stores, because you park, you're going to be gone for 20-30 minutes anyway.
Yep.
So.
Exactly, you know, yeah. So okay, yeah, so another way you can play in the sector is semiconductors. I think everybody knows Qualcomm, you know, they make the modem, broadband chips, you know, for like iPhones and things like that. And so there's more like broadband content now that's going into electric cars for the communications and stuff like that. So Qualcomm is making a big push into the automotive space. That's like the next decade growth driver for them. NXP Semi, you know, I know they're a big play in legacy auto space, but I just don't know specifically what they do. So, you know, I can't really talk much to them about what they do. But the two really interesting ones that I really want to call out is ST Micro. They make this thing called silicon carbide. Silicon carbide is basically the components that you use for charging, right? And so if you have any electric vehicle, you're gonna have, you know, you need to have a silicon carbide so that you can absorb the energy and you can dispense the energy coming out and in of the car. That's important. And also at the charging stations, you know, you need to have silicon carbide as well to kind of do the opposite there. So keep an eye on that. That could be a huge growth driver for companies like them. They're not the only one. I think STM Micro is not the only one. I think there's another one called Wolf Speed. Wolf, you know, it's in the Wolf Speed. But it's a market you want to look at. And then on Semi, I think it's like another interesting play in the automotive space. They do integrated circuits for image processing. And why that's important to me is that, you know, when you start thinking about autonomous vehicles that basically had cameras and stuff like that, you know, that kind of helps the car know how to drive itself. There's cameras everywhere around it. You're going to have a lot more autonomous vehicles, you know, coming, you know, in the next, you know, decade to two, right? So I think on Semi and companies like them will really do well in that market because of their image processing capability, because of those cameras. So something to think about. And then look at the valuation. It's very affordable. You know, it's not, you know, it's very affordable. It's straightforward. So, okay. Yeah, okay, so I think a couple more slides and then I think I'm gonna be done, I believe. So another area you wanna look at is autonomous driving. and miscellaneous software. Okay. So Rens is kind of an interesting company. I mean, I think the only thing I can say about them is that they're kind of like a high-end Alexa for high occupancy vehicle, like a bus or like a shuttle, like a bus, or a shuttle, like at an airport. But basically, the idea is that high occupancy, a lot of people come in, and those people can interact, with their software to kind of learn, about what's happening in terms of the next stops, things like that. Get information on news, weather, and even like get a tour of the surrounding area as they're navigating through the street. So like the actual software can kind of point out basically, hey, look at this target, look at this landmark over here. If you have to visit, check out this landmark and things like that. And I think it's really cool because I was in Vegas for CES back in 2019. No, I'm sorry, 2020, right before the pandemic hit. And I came out there mainly just to learn more about this company, right? And I did a demo with them, and they were like really cool business. So something to consider looking at. So I want to kind of highlight these three companies real quick. What they do is that obviously, they make the hardware and the software that you plug into an existing car, and you convert the car into an autonomous driving vehicle. That's in a nutshell what they do. Basically, Waymo is the exception. They do all of that. Plus, Waymo now has a robo-taxi fleet that they're operating out of the Phoenix, Arizona area. So I think they're like the first autonomous, vehicle fleet that was able to basically operate for commerce with like road-paying customers without a safety driver. So that's kind of interesting. They've been doing it for I think over a year now in the Phoenix, Arizona area. So it's something to keep an eye out for. And where Waymo is basically a division within Google. So you're basically buying Google when you buy their stuff. And then Mobileye and Tesla, I kind of put them in the same bucket. Mobileye, their technology for autonomous driving is based on radar and camera, right? Tesla is also based on radar and camera, and I believe Tesla is actually moving away from radar. But Mobileye and Tesla do not use LiDAR. That's important. Whereas, TuSimple, Waymo, and Aurora use LiDAR, radar, and cameras. So there's somewhat of within the industry, there's somewhat of a huge debate over whether LiDAR is really needed or not. So it's kind of up in the air right now as to who's going to win. But we know that two companies are basically not using LiDAR, and their technology is actually really good. And then keep an eye on Mobileye because they're going to go IPO sometime this year, I believe. So that's something that I would personally buy into. Okay. And Luminar, basically, they make the LiDAR. That basically like the Waymos, the TuSimple and all the other LiDAR company uses, basically. And then, as you know, like both Tesla and XPeng, they make their own software for autonomous driving, along with like integrating their hardware, into their vehicles and things like that as well. I would say that like Tesla and XPeng, believe it or not, are probably one of the two most integrated auto manufacturers that I came across. I think XPeng is really just copying what Tesla's doing, but they're extremely integrated. They do everything in-house. They do their own software, a lot of the other stuff they do as well, just like Tesla's doing.
I just wanted to mention real quick that I'm invested in Luminar Laser, and according to my research, they are light years ahead of anybody on the market. They made a deal recently with NVIDIA to be integrated into their platform, and they have deals with a Chinese company and with, I believe it's Volvo. Trying to remember here. And also, they've been the choice for Mobileye, but Mobileye, the stock took a hit when Mobileye announced they wanted to develop their own LiDAR because they've been using Luminar's. But again, it'll take them years to catch up to Luminar, and then by that point, Luminar will be that much further ahead. Okay. So I like Luminar. It's a young kid who's the CEO, and he's one of these tech kids. And I forget, I think he's like 25 or 26 years old. But I think it's a really good company. So I just wanted to mention that. That's the one I'm invested in.
So the LiDAR is a technology like radar. Is that what I'm hearing?
Yeah, I'm not an expert, Jeff, but my understanding is that radar is based on frequency. So
Okay.
just like your radar detector, when you go down the street, it pushes out a frequency, right? If it hits like a cop car, it bounces back, and based on that signature, it knows that there's an object coming, and it can determine what kind of object that is. So it's based on a frequency. LiDAR is based on light. Based on light. Yeah, so light travels faster than frequency. And so your processing is much faster with LiDAR compared to radar, right? Because it's light. However, there's problems with LiDAR. Light basically reflects off of water and snow and ice. You know that, right? And it doesn't work as well within like a foggy environment. Yeah, so that's why I think Tesla doesn't want to use LiDAR, because it's not always 100% useful. At the end of the day, you have to kind of rely on other mechanisms like camera, radar, to kind of compensate for some of the failures, I guess, or lack of capability that you get with LiDAR. But LiDAR is interesting. A lot of people believe that you need LiDAR. Why not have it just as another technology? It just costs more. And I think that the cost of LiDAR is going down. So it doesn't really make sense not to have it. I don't know why Tesla doesn't include it, because the cost of LiDAR is so much more affordable now compared to where it was 5 years ago. Yeah.
Thank you.
Yeah, no problem. Okay, right, I'll continue. I think this is my last slide. Yeah, so I think the last area that, sector that you want to consider investing in is like raw materials for the batteries and for the EVs themselves, right? And so Mountain Pass and Linus, I guess, they make rare earth materials. They're miners, so they mine rare earth materials. And so rare earth materials are typically used in batteries, and they're also used in magnets. So if you're familiar with like an electric vehicle, the electric powertrain, at the core is a big old magnet, right? And then around that core is like copper coil. And then when you inject electricity into that mechanism, it spins the coil. And then basically that whole system is connected to the transmission, and it spins the wheel, right? That's kind of the basic idea behind it for how an electric motor works. And so that's why going forward, magnets are extremely important for electric vehicles. And so that's why, Mountain Pass is a US company. So in terms of supply chain, we have our own like rare earth material company now, which is a really big plus. And then Linus, I believe, is Malaysian or Australian. They have a big mining, farm like in Australia. But I think a lot of their stuff goes towards the Chinese, for utilization. So that's why it's important for Mountain Pass, to be here in America. So SQM and Albemarle are basically lithium miners. I believe most of their mines are in South America. There's like a triangle down there: Bolivia, Argentina, and Chile. This is kind of where most of the lithium is coming from. And then also in Australia as well. In terms of like the battery, there's different grades of lithium. So for batteries, you want to get the highest grade possible. And the highest grade possible is typically in Chile and in Australia. There might be other lithium mines elsewhere in Canada, even in America as well, but it have not yet been proven that they're really good for like electric vehicle battery grade quality. But hopefully that's going to change with time. And I want to include Vale here. Vale, I think, is like the second largest nickel miner in the world. Okay, and so nickel is important in electric vehicles as well. So I want to kind of put that there. There's the Russians. They do a lot of like nickel mining in Russia as well. There's a company called Norsk Nickel that basically got hit because of the invasion in Ukraine. So their stock is not traded right now. It got delisted, or they stopped trading on it. So definitely look at Norsk. I think it's Norsk Nickel. Once it gets reactivated for trading, I think that's a great opportunity to kind of get into that stock. So yeah, so the valuations I think is pretty reasonable, except for the rare earth material companies, but like the lithium, the nickel, I think it's pretty reasonable. Okay. And this is just representative set. There's other companies out there for lithium. There's, I think in America we have Livent, which is a spin-off from FMC. They spun that company off, I think 2 or 3 years ago. And these are the major lithium miners. And then there's like a whole industry of lithium miners too. Yeah, it's ridiculous. There's a lot of Canadian miners, like lithium miners in Canada as well. But these are like the biggest ones that I want to prove here. The miners is a more trickier, sector to invest in, because you have to kind of understand like the whole mining process, like the licensing, the digging, the feasibility study. Like if you ever do mining, all those things are important because you're taking a big risk. Investing into a company that may not be able to get the right quality lithium, or even to get the lithium in general. They may think they have lithium there, but once they dig in down there, there's nothing down there of value. So you lose out, and the stock tank. So I did a lot of that back in 2017, 2016 with the lithium miners, and I made some money, then I lost a lot of money too. So at this point, I'd rather just stick with the majors, which is what I have listed here.
Yeah, Tri, I just wanted to add some comments to help add some even more value. This has been a great presentation. I just wanted to mention to everyone. So I've been following, although the last few weeks I forgot about them. There's so much going on, but I've been following Mountain Pass. That's a very interesting story. The company that owned them before was a big failure because the problem is the extraction, getting it out. That's very difficult and very cost consuming. So they're under new management. They're back on the stock market. I think they're doing pretty well. The reason they're important is because they're an American company. So they could be a source for the US to not have to go outside of our country to get lithium. So that's why they're so important. But they were a huge failure. But now under this new management, I think they're getting it done. The other thing I wanted to mention is I have owned SQM. It's a very well-run company, and they do pay a dividend. I made money on them years ago. I haven't owned them recently. And the others, I'm listening to you, Tri. I don't know them, but SQM. I was on a lot of their earnings calls. Very interesting, very well-run company.
Well, I mean, that really concludes my presentation. Like if you guys have questions, feel free to ask. And if you want access to the presentation, Ethan, you can definitely share my presentation with anybody that attended the call.